All right, guys, we got another real estate industry news update to do today, which I know isn't always the most exciting topic in the world, but trust me, we got some good stories to get into in this one. We're going to talk about the interest rate situation that's changing basically every other day, but as of the last report, interest rates were actually falling. We'll be diving into Shark Tank Barbara Corcoran's forecast for the housing market and whether or not she was right with her predictions. And last, we need to talk about birth rates, which might seem out of place, but we need to get into whether or not the fact that birth rates are falling is going to impact the housing market in any way. I, for one, am going through an emotional roller coaster basically every day. I'm a homeowner myself out here in Arizona. I've got two big residential developments that are happening right now as well. Interest rates are still crazy high. The elections are coming. Life is pretty much insane at the moment for anybody out there who is doing anything even slightly related to the real estate industry. My name's Scott, by the way. I'm your host for today's episode. Let's get into these stories. Okay, now this one really caught me off guard, kind of gave me some flashbacks to 2008. There's a lot of reports coming out right now that are saying there's a bunch of homes across the country that are seriously underwater. And yeah, we are not talking about the flooding, natural disaster kind of underwater. I'm sure a lot of you guys realize this, but what underwater means in the housing market is that you're in a situation where you owe more money on your house than it's worth. So for simple numbers, let's just say you bought a house a couple years ago for $300,000. You took out a loan at the time for $290,000. Maybe you got an FHA loan or something. Well, now because the market's been a little frothy, at least in some areas, that same house that you're living in is only worth $250,000. This means that you owe more money on your mortgage than your house is even worth, meaning you're basically trapped. You can't sell the house because if you go to sell the house, you're gonna need to cut your bank a check of like $50,000. So your really only option if you're in a situation like this is just to buckle up and keep making your payments. If you want to move out, you're going to have to probably rent the house out and hope that that rent payment covers the mortgage. It's not an ideal situation. What this article is telling us that this is happening in a vast majority of the southern states. And the exact stats are right here. So 1 in 37 mortgaged homes were considered to be seriously underwater nationwide. And seriously underwater, I was kind of wondering what that meant. What they're getting at there is anything seriously underwater is where the outstanding loan balance is 25% greater than the property value. But even though there's a lot of borrowers who are in this unfortunate condition, there's some good news. They're saying here that 46% of mortgage borrowers were considered equity rich, which means that they had paid off more than half of the property's market value. So that's pretty awesome. This is all somewhat new news for me. I mean, we all knew that office loans have been underwater for a while now. Experts are predicting that 44.6 of US banks' office loans currently have balances that are larger than what the property is worth. So I'd say the residential market, yeah, they might be feeling a little bit of pain right now, but where we're gonna really see a bloodbath in real estate is in commercial, specifically office. The fact that there's a bunch of houses right now that are underwater is a little bit depressing. I'm not gonna lie, but on a little bit of a lighter note, interest rates are actually ticking down at least a little bit. The rates went down for the first time in 5 weeks. The average 30-year fixed rate went from 7.22% down to 7.09%, according to a report from Freddie Mac, which doesn't sound like much, and it's not much, but we really needed this relief because for those 5 weeks leading up to this moment, interest rates weren't just sitting flat, they were actually ticking up. If you look at this chart here, you can see we hit a low of around 7% the first week of April, and conventional loan rates have been going up basically ever since then. If we pull out the mortgage calculator and we look at where rates just were, they were at 7.22%. On a $300,000 loan, that means your principal and interest payment would have been about $2,040 a month. Well, if we flip that down to 7.09%, your principal and interest payment would drop to $2,014 per month. So yeah, you're gonna save like $25 per month on an average price home with this rate drop. It's not much. We're headed in the right direction though. Fed Chair Jerome Powell did say that interest rates are going to stay at these higher ranges until inflation cools down even more than it already has. With the summer season approaching, areas like where I live in Arizona, where the real estate market typically slows down, might see an even bigger impact if we keep rates up at this 7+% range. But if they can tick down even a little bit, just to say around 6.5, I think that'll be enough of a drop for us to see the housing market at least be able to kind of hold steady. Despite despite the absolute buzzkill of a situation with the interest rates, the housing market actually isn't doing all that bad. They're saying that prices have gone up 47% already in this decade, which just started like 4 years ago. That's almost as much as housing prices went up during the 2000 decade. Yes, the same decade that led to the 2008 financial crisis. According to this very confusing and very overwhelming chart by the Case-Shiller National Home Price Index, home prices have performed crazy good this decade, starting in 2020, with prices going up 0.6% just in the last month alone. And just to put that in perspective, you guys, if you bought a house for $300,000 just 4 years ago, a 47% increase in price means that your $300,000 house is now worth $441,000. This is why I always say that owning real estate is so amazing. If you bought a house 4 years ago and you just lived in it, you didn't remodel it, you didn't do anything, you just lived in it for 4 years, you would have gained $141,000 worth of equity. Oddly enough, a big part of this frenzy was COVID. COVID's what kicked this all off, which is kind of crazy because when COVID was initially happening, we all thought it was going to be the end of the world, but what it ended up doing instead was just giving a huge boost to the economy. They're saying that since that initial COVID boom, price growth is slowing down quite a bit, but there's still that surge from these millennial home buyers out there. This chart kind of paints a good picture. It goes from 1990 all the way through pretty much today. Shows the average year-over-year reading for home prices going up is 4.4%, which is actually not all that much. It's like half of what you get if you put your money into the stock market. Prices obviously went way down in 2008, which I'm sure is contributing to this pretty low average. They went way up after 2008. They held pretty steady until COVID. Huge spike up, huge spike down, and now we're hovering at around a 6.4% growth. So that's somewhat close to the historical average. I might not know where the market is headed. I don't have a crystal ball, but it seems like Barbara Corcoran does. She's been very optimistic about the residential housing market for a while now.
Tell us exactly what you see, and let's separate these. Residential real estate.
What we really have holding up the market is the bottleneck that's out there. Sellers don't want to move from their apartment or their home because they don't want to take on higher interest rates, and buyers are too afraid because they're getting less house. In fact, they're getting half the house they would have only 2 years ago. So you get a Mexican standoff going on, but things are changing. The people who are going out there and buying are finding they're overbidding. They're having a hard time getting their hands on the house. And right now, what everybody's afraid of is the high interest rates. But the minute those interest rates come down, all hell's going to break loose and prices are going to go through the roof.
I love Barbara. I love her optimism. And she clearly has a good handle on what's going on in the real estate market. I mean, she made her fortune literally in real estate. Everybody seems to be in agreement that when rates drop, there's typically a surge in housing demand. Lower interest rates make mortgages more affordable, and even a slight decrease in rates really can spark a surge in home purchases. This is something to keep in mind for any of you guys out there who are either first-time home buyers or second-time home buyers, or maybe you're a real estate investor who's thinking about getting into buying a rental property or flipping a house. The reality is that the general direction of real estate, if you look at a long enough chart, has always been up. And so, yeah, we might not know where the market's going to be by the end of this year, but it's pretty safe to say that in the next 5 years or in the next 10 years, housing prices are going to be higher than where they're at right now. I never thought that a topic like this would make it on the show, but we're going to round this episode out talking about babies. I guess there's not enough babies being born nowadays. There's been a lot of talk about this slowing birth rate for a while now. You can see in this chart, in the 1950s, we were around 5 or 6 births per woman, which actually sounds kind of crazy. But nowadays, we're all the way down to 2 or 3 births per woman in most countries. When I see headlines like this, I'm like, okay, yeah, this is probably a pretty big problem. And then it's reinforced when, like, I see Elon Musk say that the slowing birth rate is quite possibly the biggest threat to the human race that we've ever seen. But of course, the question that also goes into my mind being a real estate guy is, will this impact the real estate market at all? So for one, NAR says that having a baby often does lead to somebody upgrading their home or buying a home. So if there's less people having babies, there's in theory less people who's needing more space for that reason. Then the second obvious issue here is that if we're having less babies now, then there's just going to be a lot less humans on the planet 30 to 40 years from now, which means maybe at that time we might have more houses than we need. My take on this though is that it's probably going to take a lot longer than 30 to 40 years for us to see that impact, because anywhere you look right now, it talks about the housing shortage problem that we have, at least in most major cities. So if we've got a major deficit or shortage in houses that are being built and we currently can't keep up with the demand, it's probably going to take a few decades before we get to that point where we're building enough houses to keep up with the demand that's out there. And then if we get to that point, what's probably going to happen is a lot of the home builders are going to start slowing down their production of new homes if they need to, just to kind of match with the people who are entering that age range where they're going to be ready to buy a house. So even though there's not as many babies being born as there used to be, I think we're probably going to stay in a situation where there's demand for all these different type of housing. That's a wrap for this week's industry report. If you guys enjoyed the episode, remember to hit the thumbs up button down below before you head out. I'll see you guys next time.